The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box with Karen Cho and myself, Steve Sedgwick, and these are your headlines. Donald Trump picks the Cantor Fitzgerald CEO Howard Lutnick to head the Commerce Department, and former pro wrestling executive Linda McMahon as Education Secretary, whilst reports suggest the Apollo CEO Marc Rowan is leading the race now to head up the Treasury. Technology stocks outperform with AI darling Nvidia rising close to 5%, investors counting down to today's earnings release.
Qualcomm says it's positive on President-elect Trump as it flags $4 billion in PC chip sales over the next 5 years, moving away from a reliance on its smartphone business. Ukraine fires American-made long-range ballistic missiles at Russia for the first time after Putin eases his own rules on nuclear engagement.
How you doing?
Well, thank you. Good morning.
Yeah, good morning. At least we only have one more day to pontificate on Nvidia rather than at the start of the week. Well, we started previewing it on Monday morning. I mean, look, there is no doubt about it. We're back to normal now. We're back in the world where normal isn't very normal, i.e. we're all obsessed about this one AI stock. What I find extraordinary is the market destiny today will probably, or certainly in the next 24 hours, will probably be determined on Nvidia. But if ever there was one stock that you shouldn't base the rest of the market appetite on, it's Nvidia. Because as we've said time and time again, for want of a better word, Nvidia's a bit of a freak. It's kind of like it is an extraordinary company that has had extraordinary growth, that has extraordinary growth potential going forward and profitability. Trades at a not particularly extraordinary valuation. We've discussed that quite a lot as well. So why would every other stock in the S&P and Dow and NASDAQ, why would they be determined on this one stock when it is such an outlier compared to, for instance, we've heard so many stories about semiconductor stocks, designers, fabricators having problems.
Yeah, let's just talk about it by numbers. We're talking about a nearly $300 billion swing in terms of market value today. That's what the market is primed for if you look at options trading. So
for just that one stock?
Exactly, in terms of what market cap swing we could see in Nvidia. Okay. So if you put that into context, that would dwarf the market cap of 95% of S&P 500 constituents. So this is a huge number as we talk about it being a macro event. That's exactly why. In terms of which direction, I think the market thinks we're more likely to go up than down. This is a constant winner in terms of beating on estimates. So there are hopes that it comes up with the same magic trick again. However, that said, it's had a lot of issues in terms of executing design flaws, supply challenges. So whether there's
despite
a disappointment
the moat's
short
in
term,
place.
that's the problem.
I suppose we're expecting a beat, of course. If there's not a beat, then that's a miss in itself. But the whisper's surely got to be about moats and how long they think they can hold on to the moat, which, quite frankly, the Oppo haven't kind of breached that moat yet, have they?
They're trying to with some sort of accelerator AI schemes using the technology they have. So they're certainly trying to get there, but Nvidia is a very sort of easy way of executing as such. But in terms of the market relevance here, don't forget you've got a lot of index trackers. Nvidia's in some of those index trackers, the overall market itself. Can the market these days go up if Nvidia doesn't go up if it has
those
a mare?
495 companies you mentioned, quite frankly, it's irrelevant to most of them whether Nvidia beats or not. That's the irony. And yet their destiny will be tied to Nvidia today.
Can I beg to differ slightly?
Go on, because why are you so polite? We don't normally say that.
Well,
may I confer with you, my friend, and slightly
I'm just piecing it together. Don't forget,
digress.
A lot of companies have the orders in place.
The server companies,
exactly.
the
So your
data center companies, the Microsoft. Yeah, but
so other big market cap companies.
I apologise. 490 companies it's irrelevant to.
But these are big companies, and then there's also supply chain links to those companies.
But the other ones you just mentioned who are less than that $300 billion swing.
Let me put the whole supply chain together for you then. So Nvidia makes the chip. You've got these other big companies that are trying to create these large data centers.
Yep.
Then you have other companies also listed on the stock market that are trying to leverage the AI either. They get through these data centers, through the hyperscalers.
But we're not going to see.
There's about 3 tiers here of companies that could be impacted by what Nvidia does, and these are stock market listed companies. So I think it's a wider sweep.
You lost me after the first tier of the cake. First tier of the cake,
companies.
I agree with you. Yeah, data centers, blah blah blah, the big companies. But the rest of them, we're not going to see it. They might say at the margin.
SaaS companies. There's a whole heap of them out there listed. They're all leaning towards AI, and they're hoping AI is going to maximize their business models.
Yeah, but we're not buying or selling.
Are
we buying or selling those SaaS companies and those others on the basis of what they're doing and what their profitability looks like over the next 12 months, or some spurious hope that actually AI may improve their productivity at some stage?
AI is coming on some of these businesses now. I mean, look at Salesforce.
No, it's coming, but it's the same conversation you and I have had 100 times. AI is coming in the same way that email came, in the same way that clouds comes, in the same way that the telephone came, Alexander Bell back in 1900 or something. The fact of the matter is, these companies will need this technology, but show me the profits from it is what I want to know.
Some of them are using the technology now. It's part of their absolute growth strategy in 2024.
Some of them.
So it's more than 5 companies.
10. Squawk Box, what else do you want? Go the other place if you want just to hear the stories. There's nothing without the editorial. Donald Trump has picked Howard Lutnick to head the US Commerce Department, with the president-elect saying he will spearhead the new administration's tariff and trade agenda. Lutnick is the founder of financial firm Cantor Fitzgerald, of course, and the co-chair of the Trump transition team. So he got commerce, he didn't get the Treasury. I think that's the point, isn't it? Meanwhile, Apollo CEO Marc Rowan will reportedly hold talks today with Donald Trump for the Treasury Secretary role. That's the peach they'll want, isn't it? According to the Financial Times, markets have been, that was according to the Financial Times, markets have been closely eyeing who is slated to fill the position, with several proposed candidates jostling for the role, including the aforementioned Lutnick and hedge fund boss Scott Bezant. Can you imagine what it's like at Mar-a-Lago trying to get these jobs? Not for me, sir. And Linda McMahon is Trump's pick to lead the US Education Department. What kind of qualifications do you need to head the Education Department? Well, of course, you need to be a former pro wrestling executive. She had reportedly been in the running for the commerce role. McMahon served as administrator of the Small Business Administration during Trump's first term as president.
You know, we're missing one correspondent. Luckily, he's on later today. He is the WWE expert, and that is Arjun.
Right.
He does know everything there is to know about wrestling.
You know, he's just bought a stunningly large television set so that he can watch that and Lord of the Rings.
And he would tell us it's often about the narrative behind these scenes that you see in the wrestling world that makes it so interesting. Yeah. So is there a link towards literacy and writing skills when it comes to McMahon? I know it's a stretch.
I don't watch wrestling, I'm sorry.
Let's push on to markets. I want to show you what we're seeing on those boards on the back of yesterday's trade. The Dow again showing some fatigue, so pulling back, 4th negative session in a row, down almost 1/3%. United Health, one of the weaker ones. Actually, Nvidia was the stock moving to the upside, would you believe, for markets. So a day early, we'd seen some selling taking place and caution ahead of the market event that is its earnings this week. But bounce is what we saw, and that helped out the S&P 500. The Nasdaq also rallying to the tune of 1%. So some gains there. Nasdaq, second positive session in a row. Treasuries, this is the early picture. We are seeing also green. So these yields again marching higher. We're 4.4 on the 10-year, 4.28 at the short end of the curve. And let's see what that's doing for the dollar. We are seeing the trades weaken here in Europe this morning versus the greenback. So euro sterling both on the back foot. Some slippage there, although the handles seem roughly the same as we take a look at where we've travelled in recent days. 105.85 on euro dollar, cable 126.79, and we've got dollar yen strength. 0.4 dollar marching high there. Dollar also firm against another safe haven, and that is the Swiss.
Right, Daniel Morris, Chief Market Strategist, BNP Paribas Asset Management. Dan, you've listened to our conversation. Jump in here, and I know one of us could be cruising for a bruising, got that one wrong, on this one. But is Nvidia as important for everyone else as it is for Nvidia? The answer clearly is no for that, because Nvidia obviously is most important for its stock. It's had a 100% beta on that one. But in terms of its effect on the rest of the market, should it be as important, given the fact that Nvidia's story is all about the success that Nvidia has?
Well, I mean, clearly it has, shall we say, disproportionate impact on investors' outlooks for equities more broadly, depending on what happens with it. If you saw a significant decline in the stock, inevitably that's going to have a spillover effect on the rest of the market. And I think it would come down to what's the reason for that. If it's simply that it's facing higher competition, and there's another company that's picking up its share, well, really that is arguably either neutral or positive for the rest of the market. If it's fundamentally because of a change in sentiment towards the potential for AI, then clearly that's quite different. So I think it will matter. If it were to decline, I think it would come down to what's the genesis or the reason for it.
But I'll ask the same question that I asked Karen. Why does this matter for any company more than any other technology out there that they are trying to adopt, more than cloud, more than streamlining their operations elsewhere, other than those companies who are building data centers whose destiny is very, very closely tied to AI chips at the moment?
Well, I think you'd separate the short term and the medium to long term. In the short term, the I guess technology related sector more broadly likely would suffer if you saw Nvidia suffering. You kind of ask yourself, what's the potential in the rest of the market? Shall we say the non-NASDAQ part of the S&P 500, say Russell value? That really should be broadly independent of what's going on in the semi-related sector. So totally agree that from that point of view, it's not so significant. But then you would question, well, how much earnings potential, how much earnings growth are you going to see in the value part of the market relative to, say, NASDAQ, and certainly much lower? And then that question is how much equities as a whole are going to rise. I think, quite longer term, if we think about the potential and what may be being priced in the market for AI to transform the economy, it frankly should ultimately be in the non-tech parts of the market, particularly those sectors where you have a high share of costs coming from labor, because that's the primary constraint for a lot of companies, not only in the US, but in Europe as well. And if AI allows you to grow profits without having to increase your labor costs, well, that's going to drive profitability, but certainly not tomorrow.
Dan, I think the broader question really is what is the market doing from here? Because if we're looking at Nvidia and its potential for the market, we're also looking at what the catalysts are for market drivers here. Just as there are fresh expectations we could rally again to record territory on the S&P 500, but also expectations that we could fall off a cliff. The skew that Morgan Stanley came up with this week on the bull-bear scenario was very, very wide. And you've got others also saying, look, we're approaching a danger zone when it comes to yields. What's your view on the risk return here versus the potential downside?
Well, in our multi-asset portfolios, we are overweight equities, and overweight U.S. equities have increased our overweight to U.S. equities post the election. So without question, we can spend a lot of time talking about all the risks that are out there, some of which more likely than not will materialize at some point. But we think the gains that we're anticipating in U.S. equities post-election, as you try to price in, what clearly is going to be a rather different landscape for us, is still positive. But naturally, you're assessing at every moment when things perhaps have either gone too far, or you have an unexpected surprise, or one of those risks actually starts to become a reality.
Let's talk about one of those risks, geopolitics. Everybody's talking about it at international events. A lot of CEOs, heads of state, all concerned about the geopolitics. And this week, we wonder whether we've ratcheted up more when it comes to the war in Ukraine, with the use of US missiles being fired into Russia from Ukraine. And then, of course, that pushback from Putin this week. What do you make of how the geopolitics have, or whether they've worsened from here?
Well, I think if you look at the reaction of markets after this happened yesterday, it's as you would anticipate in this type of scenario. Certainly in Europe, you saw equities weakening, treasuries rallying, gold rallying, yen, and so on. So I think the market reaction is a risk-off move. It will depend on how things evolve from here. Clearly, it's going to be a potentially turbulent time between now and when Trump takes office. But in terms of hedging, shall we say, against those risks, I think it's clear what assets you would want to be looking at.
Daniel, this historic discount that Europe trades at, with all the growth concerns, all the political leadership concerns, the war concerns, the higher cost of energy concerns, surely when I look at some of these valuations, that's in the price now. I'm looking at some stocks, some massive stocks, that are trading a 50% discount to their US peers and do roughly the same thing. They're both international companies. Surely where some company is based shouldn't matter that much.
Absolutely. And kind of the parallel discussion often is, do you try to allocate to country indices in Europe as opposed to European indices? And the response is much the same. These are multinational companies that trade in particular location that isn't necessarily relevant to their profit outlook. I certainly agree that simply from a valuation point of view, European equities would seem attractive. I think what's going to determine the relative performance of the markets, though, is going to be the earnings performance. You often need some sort of other catalyst to close that big valuation gap. We don't see a reason for that necessarily. And so if it's just simply earnings growth, there it's hard to see European equities outperforming in the near term.
All right, Daniel, thank you very much indeed for that. Daniel Morris, Chief Market Strategist at BNP Paribas Asset Management.
Our US colleagues will be speaking to the Goldman Sachs chairman and CEO David Solomon. Don't miss that exclusive interview at 1600 GMT. And we'll also bring you an interview with Morgan Stanley CEO Ted Pick. Our colleagues in Asia will be speaking to him live from the Morgan Stanley Annual Asia Pacific Summit tomorrow at 2:30 GMT. China left its benchmark loan prime rate unchanged as expected after lenders cut rates last month to boost activity. The PBOC kept the one-year LPR at 3.1% and the five-year at 3.6%.
Right, coming up on the show, we're going to get a tech check ahead of Nvidia's earnings release today. That's coming up after the break. Plus, Scholz faces growing pressure to stand aside back at home as he meets with China's President Xi in Brazil. We'll bring you the latest from Germany this hour. And Arjun joins us live on the ground from Slush in Helsinki, where he'll be joined by Ian Hogarth, who is the co-founder of Plural. That's a first on CNBC interview at 8:30 GMT.
Qualcomm says it expects to push into new markets to generate an extra $22 billion per year by 2029. The company says it expects around $4 billion to come from sales of PC chips. Qualcomm expects revenues in the automotive sector will rise 175% in the next 5 years to roughly $8 billion. Qualcomm CEO Cristiano Amon told CNBC he was expecting the PC market in particular to continue to grow.
We have seen significant traction increasing in PCs from our OEMs. We have successfully launched and started the ramp volume on X series. And it's also good to see ARM showing our devices when they message to investors about that there's now ARM into the PC ecosystem.
A US AI startup, ProRata, is teaming up with several UK media groups to make their content available on its own AI search engine. The company is adding Sky News, The Guardian and DMG to its list of partners, paying them based on how much of their content is used to generate AI answers. Bill Gross is CEO of ProRata, chairman of Idea Lab. Bill, thank you very much for joining us today on the back of the announcement around the media partners. It's fascinating. I think everybody's been wondering how media monetizes, what's fair game in terms of accessing content. Just walk us through your business model and the addition now of some of these partners.
Thank you, Karen. Let me set the stage. We're living in wildly disruptive times. AI is powerful and unstoppable, but it's also unfair, and we're making it fair with ProRata. We feel that creators and consumers both deserve protection because right now AI algorithms are just shoplifting everyone's content. And when that content is used in a search result, there's no attribution to whoever owns it, there's no credit, there's no revenue share. And we feel just like all other media types, like music on Spotify, like videos on YouTube, like news on Apple News, the revenue should be shared pro rata. So we came up with an algorithm to take a look at the output of large language models and generative AI and figure out how much contribution was given from each piece of content and on an actual percentage basis. And then we share revenue pro rata that way. And we think this is revolutionary for publishing.
So Bill, are you saying that some of the big language models that we know now cannot simply just rip off the articles that have been posted, you are knowing exactly who's taking that content now thanks to the algorithm?
Exactly. Right now, take Spotify, for example. If you listen to a stream of music, you can count that stream. But in generative AI, when you look at the output and answer, it's not obvious exactly where it came from. But we've developed the algorithm actually using AI to figure out what components made up that answer. And once you have that, then you can share revenue fairly with the people who create content. And that's why so many people are joining us, just as you said. Today, we have 10 new partners in the UK, but in the US, we have a number of partners who've joined us too, Universal Music Group and The Atlantic and Time Magazine and Fortune and others. We really want to make a movement of all content creators to participate in a fair revenue share of this new generative AI revolution.
Did you say a movement or a union, Bill? Because it sounds like a union to me for fair price for my labour, so to speak. And it is our labour, because obviously we're associated with Sky as well. But my point being is, who's going to pay? It's great that you've developed the algorithm, and it's great that it's going to be fair, and it's great that there's a movement. Who's going to pay us, Sky, or the others?
The three places that the revenue comes from are either from subscriptions, or from microtransactions, or from advertising. And all of the services are making tons of money, like Google's making tons of money from advertising, for example. It's just that I feel half of that revenue should go out to the people who made the content that shows up in the answers. So the money is there. It just isn't currently being shared with the people who created the content. And that's what I want to change. We're on a mission to change that.
Let me go down the road. Hi, is that Elon? It's Bill here. Hi, Bill, how are you? Yeah, I need some money from you because you're nicking off all our stuff. It's on Twitter, we can see it all there. You're going to pay. What's Elon going to say to you, Bill?
Well, here's the way we're going to get everybody to pay eventually. First, we're going to gather many, many great content providers who all say this is the way it should fairly be done. Second, there's a lot of legal movement. There's a lot of lawsuits going on right now, like the New York Times is suing OpenAI for $1 billion, and News Corp is suing Perplexity and others. So those lawsuits will settle out too. But the real way that they'll come around is quality. As the quality goes down of their results, as they don't have access to the good content, and the quality goes up from the places from people who are paying, that will push the big companies to participate. Because in the end, the consumer who's using the search demands good quality. And that's really what's going to win out in the end.
Bill, I'll pick up on that point, good lord, because we are watching the Trump administration incoming and trying to guess what that means in terms of regulation. We know it's been a fairly tough regulatory environment for technology in the last number of years. Does it matter then who takes up key regulatory roles to ensure some business model success here?
I think that the EU and the United States will work together to make regulations that are fair. But again, the business model that makes the better quality answers will probably win out at the end. And that's what we're really pushing for. Think of this example here. You have CNBC people in Singapore at the APEC conference creating great content. That should be surfaced in search engines. When it does, you should get paid for creating that. And in the end, if you don't get paid, you'll block that content from the people who don't pay, and there will be less quality results there. For example, if you ask a question about that conference and that information isn't there from your reporter on the ground, the answer will be made up from statistics from the users of Reddit and Twitter, as opposed to the actual reporting that you did on the ground. That's why we think it'll win in the end.
I love this conversation, Bill. Can I just slightly tweak it? Because you also... via your, Idea Lab and what have you, you've basically operated more than 150 companies, 45 successful IPOs. Well, I wanted to talk to you about actually the pitfalls and go back to Karen and I's Nvidia conversation a little bit as well, because one thing I know is there is going to be, and I can't think of a better word, so I'm going to say it. I think there's going to be a lot of stummers out there as well. You've got the Nvidias of this world, you've got some amazing, but you've got a lot of stummers who just call themselves .ai in the same way they call themselves SPACs or cloud or whatever as well. How are you negotiating all that?
Yeah, well, I think that the AI revolution actually could possibly be underhyped, and I'll tell you why. Think of the different things that AI can actually do. They can take things and replace it completely, like the loom did for knitting, or they can add value and make you a little faster, like the slide rule did, or they can invent completely new things that you couldn't do before, like the crane. The crane enabled humans to do things they couldn't even do before. I believe AI is going to do that. And that's going to have such a big impact on productivity. So the companies that actually work and create the applications that increase productivity, that increase monetization, that increase value add for consumers, I think they're going to be huge. The companies that don't do that, I do think they will just be a .ai in the end of their name and they won't succeed. But I feel this idea, for example, this enables publishers to make money when their content is surfaced in search engines. That's revolutionary. That couldn't be done before. So we feel this is one application that's going to be a standout, that's going to be extremely valuable going forward.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.